Hey everyone, welcome back to the channel. Today we're going to look at something that affects every one of us every day, whether we realize it or not. Why our money buys less each year. So this presentation is called What Has Government Done to Our Money? And it's based on a simple idea. If you understand what money really is, you can protect yourself from losing purchasing power over time. So let's get into it. So what is money? Well, what we think of as money is essentially it has three jobs at its core. It's a medium of exchange, it's a store of wealth, and it's a unit of account. And although those sound simple, once you see how modern money fails at some of these jobs, the rest of this story starts to make sense. So, if you consider this, Disney money. You buy Disney dollars when you go to, or when you used to go to Disneyland, Disney World, etc. And Disney dollars were Disney's own playful currency. So inside the park, everyone accepted them, and it felt like money. You handed over your money, you got your Disney dollars, and then you went round and you spent them in the park. But the moment you leave the park, try paying your council tax or buying groceries with Disney dollars, no one will accept them. Their value only exists because Disney says so, and because people inside the park go along with it. Disney says that it is money inside the park, and therefore it is money inside the park. So isn't that not very different to what goes on with the pound and the dollar, for example? Because fiat currencies work the same way. They're only accepted because the government says it is legal tender, and because we all agree to trust it, because it's been mandated that this is money. However, unlike gold or silver, for example, monetary metals, fiat money, currency has no intrinsic value. It's essentially a government dollar or a government pound. Just like Disney issues its own Disney dollars, so governments issue their own currencies. So there's a difference between currency and money. Here's the crucial difference. Currencies can be printed, but money cannot. Currencies are created by political systems and can be expanded without limit. Real money, or real monetary metals like gold and silver, they're scarce, they're tangible, they've held their value across centuries, and you can't simply print a ton of them. You have to go into the ground, dig them up. It's a key difference. Currencies can be printed, but money cannot. So just looking at the pound for a moment, this is how we got here. In the 1600s, £1 literally meant £1 weight of silver. That was its origins. And over time, there was a gradual shift from silver, eventually to a gold standard, and then in 1971 over to a fiat or paper currency. So today, the pound has no gold or silver backing. What was once tied to real metal are now just paper and digits. So, question, where do central bankers live? Answer, in debasement, boom boom. And this slide basically shows an image of central bankers literally printing currency. The joke is light, but the impact is real. Debasement means reducing the real value of money by creating more of it. Every new pound printed makes the existing pound in your pocket worth a little bit less. So why does it matter to you? Because this is what inflation is. Inflation is the inflation of the money supply. And as more money is printed, the value of each individual note decreases, and that is debasement. So as prices rise, actually £1 is buying less. So the purchasing power of each individual pound diminishes. So the money that you get in your salary, your savings, they lose purchasing power over time as more currency stroke money is printed. As an example, £1 in 1970 is the equivalent of £15 today due to inflation. And this is what governments do to our money. They debase our currency, and that erodes our wealth silently over time. So we know that an inch is an inch forever. we'll go back in time, forwards in time, you know, an inch is going to be an inch because it's a unit of measurement that stays fixed throughout time. People consider that currencies are the same, like £10 is £10, £1 is £1 over time, but it's not true. They get diluted the more they are created. Think of currencies more like a glass bottle of milk, and half the milk has been removed and it's been replaced by water. Now it might look the same as the original, but it is only half as potent because there's only half the amount of milk in there, even though the white liquid appears to be the same. So think of like currencies a bit like diluted milk. This is a quote from Murray Rothbard, who wrote a book, What Has Government Done to Our Money? By diluting the value of each ounce or dollar of genuine money, the counterfeiter's theft is more sinister and more truly subversive than that of the highwayman, for he robs everyone in society, and the robbery is stealthy and hidden, so the cause and effect relation is camouflaged. Debasement quietly transfers wealth from savers and the unorganized public to the state and its favored insiders, which distorts prices and economic signals over time without immediate detection. So, as an example of this, here's some visual proof. This chart shows you house prices measured in two different ways in the UK. House prices measured in pounds, and that's the green line, and you'll see that house prices look like they've been going up and up over time from the 1970s onwards. And then the blue line there is house prices measured in gold, and you'll see that although it looks like house prices have skyrocketed over the decades in pounds, when it's measured in gold, the long-term trend is almost flat. This tells us something important. It's not that houses have become dramatically more valuable, it's that the pound is becoming dramatically weaker. So here is another chart, that shows gold rising against both the pound and the dollar. But actually what they really show is the other side of the same equation, that currencies are falling against gold. Gold isn't going up, the measuring stick is shrinking. Here's gold against the pound, here's gold against the US dollar. So now that you've understood a little bit about the difference between currency and money, how can we actually protect ourselves? Currencies weaken, but money endures. Now, precious metals have held value for thousands of years. In fact, it's actually monetary metals that have held value for thousands of years. Monetary metals are metals that have been used as money over time, and that essentially is silver and gold. Precious metals include a wider range of metals that aren't necessarily used as money or haven't historically been used as money, like platinum, for example. So investors use gold and silver as a hedge against currency debasement. And over time, when governments are inflating away our currency, it is hard assets that are favoured over paper assets. So this isn't financial advice, but knowing this difference gives you power. Hard assets are things literally that you can either hold in your hand or that you actually physically can own and can point to, like land, for example, or property. So I've produced another short video about some top macro finance YouTube channels. Macro is the big picture finance of where we are in the world currently in terms of finance and how that affects us individually. So if you would like to see that video, you can go and watch it on my channel as well. And if this presentation helps you to see the difference between currency and money, even slightly, please make sure to subscribe. I'll be releasing more videos. In fact, I've done another video as well about what government has done to our money as well, or why government has done what it has done to our money. You might find that one interesting as well. Please subscribe, and hopefully I'll see you on another one of my videos. Thank you for listening to the end, and I'll see you again.